Hello and welcome. My name's Ryan Johnson, and this is the Saltcast. And today, everybody, do I have a treat for you? Before I introduce who's on the podcast today, let me just give you a quick bio of this amazing person that we have on with us today. Not often do we have somebody on in the same space in the sales tax world.
This is true.
But I'm excited for today's. So let me give this introduction. So our guest is Jamie, and she assists business in all aspects of state and local tax, from compliance to audits and administrative proceedings through litigation. Outside of work, Jamie serves a variety of organizations, including MothersEsquire, Trinity College Board of Trustees, a local dental nonprofit, and several bar associations. Jamie enjoys raising her fiercely independent, impish daughter, singing and hiking around Maine with her husband, daughter, and dogs. Now, Jamie, that is impressive. So I was hoping you could kind of talk about yourself a little bit more and kind of introduce your firm.
Hi, guys, and I'm excited to be here. As Ryan said, my name is Jamie Szal. I am an attorney at Brann and Isaacson. You may have heard of that little internet tax case from 4 years ago, the Wayfair case, and that was ours. It's been a wild ride. I am a tax nerd. I used to shun at that a little bit. We're like, the people at the cocktail party that nobody wants to talk to, but taxing is exciting. I'm going to convince you on that. And I have spent my whole professional career as a lawyer in the SALT world. I jokingly tell people we're the black sheep of the tax family, but we have the best puns and the best humor and the best jokes and the most interesting tax, as far as I can tell. So that's me in a nutshell. We're up this little firm up in Maine, kind of taking on the big dogs with Wayfair, and got new litigation out in California, Cookie Nexus litigation in Massachusetts, and punching above our weight. So I love it.
That's so cool.
So awesome. I appreciate you jumping on with us. Tell me a little bit more about your history. I understand you worked with Massachusetts, right, before joining the firm?
I did. Before I came over to BNI, I was at the Massachusetts Department of Revenue for 8 years, and then I went to the right side, dark side, whichever group of my friends you want to talk to, and joined BNI. And I remember sitting there in my interview. One of the senior partners, George, who did the Wayfair arguments at the court, said, "Well, why do you want to come work for us?" And I sat there and I said, the Supreme Court is just like dangling a little carrot in front of me. And a year later, there we were with Wayfair. So it was
so cool.
I manifested it. True. I don't know, but it was a lot of fun.
There is power in that. I love that.
Yeah. Yeah. And that's my background. Yeah.
Do you find yourself doing more sales tax or income tax, or what is it?
Yeah. I started my career a lot more in income. I do it. Yeah. I don't do much property tax. I don't do much estate tax. I started my career a lot more with income tax, especially when I was still stateside. But as you could probably guess, in the lead up to Wayfair, the whole kill quill movement, and then in the years post Wayfair, when everybody was grappling with like, okay, now what? How the heck do I figure out 50 states of compliance? It's been a lot of sales tax lately. We're starting to see a swing back to income taxes as states refocus back on other audit priorities. But we do it all.
That's awesome.
Yeah. I love it. It's fun, It's
It really is.
I was trying to describe it to someone the other day with the tax world, another fellow tax pro, and they said, you guys would probably agree, but I find that tax people often describe why they like taxes as, puzzle solving, right? We're trying to figure out and put all the pieces together. And I like to think of SALT as 3D puzzle solving, right? You've got the issue that you're putting together, and then you multiply that by all the different jurisdictions. And so.
That's a good way to put it. I like that, a 3D puzzle. Because it certainly is. I mean, you're solving problems, you're finding solutions, and oftentimes the states don't make it easy on you. I mean, they provide this legislation, right? And then they leave it gray or ambiguous so that they can come in and interpret however they would like under an audit situation to rule in their favor. I mean, on the sales tax side, you deal with that on a number of issues, from data processing services to software as a service to information services. Well, what is the service I provide? And how would you define that? Well, the state defines this as this, and the state defines this as this. And so under audit, I could see it going either way, but here's how I would argue it, and here's the reasons why. And so it just becomes this unnerving issue and problem of trying to stay compliant, constantly reviewing and changing or making adjustments.
Yeah.
So.
And there's no uniform definition of anything across any of the states or jurisdictions. Heck, I mean, you look at Illinois and there's a difference from what's enforced at the state level versus at the local level too.
Yeah,
so
right.
It gets really complicated really quickly.
You have similar instances in Colorado where the state imposes one thing, and then you have the home rules of Denver and Colorado Springs, who completely different.
This
or they
whole
take
retailer delivery fee fiasco of this year
Oh.
just highlighted that.
Yeah.
Yeah.
Now I understand that the states are ruling on whether or not that fee is taxable, whether the state of Colorado now charges tax on that fee. So they require the taxpayer to collect this, what they're calling the retailer's delivery fee, right? Yeah. Which is a certain 27 cents per transaction. And now it's a matter of, well, do I charge tax on it? Is it included in my taxable base or not?
And it's not at the state level, but it is at certain city levels. And you try to, grapple with your tax side. You try to figure this out. All right, well, how do I set my tax solution in tax software so that way it has that rule in there, right? Only in these 3 weird home rule cities in Colorado do I have to change the tax base.
Yeah. It's we talk a lot about how there is wisdom in providing automation to what you're doing, and then there are complete downfalls to providing automation. So you take the pros with the cons, you take the good with the bad of automation, automated providers and service providers out there. But this idea that it's constantly evolving and changing, I mean, both in the sales tax space and the income tax and legal space, is quite surprising to me. How difficult it is on businesses and taxpayers across the board to keep up with.
Yeah. And it's, when we say constant changing, it's constant changing. I mean, every week something new is coming out and changing in different jurisdictions. And it's that pace of change has slowed down a little bit from the post-Wayfair period, but not all that much. So it's like going back to raising a baby, right? Just when you think you've got everything under control, you've got the schedule, everything changes. It's like the tax world right now. So,
that's wild. What are some of the things that are hot in your world, whether it be sales or income? Obviously, at Peisner Johnson, we focus sales and use tax. Our listeners are used to us talking about sales and use tax. But what are some other things that they ought to be concerned or aware of that's hot in your world that you're currently working on or have worked on over the last 12 months, type of a thing?
I'd put it kind of in three big buckets of the things that are hot. Massachusetts and its cookie nexus enforcement remains very active and very aggressive. For people out there, this is one of those states that's the only one now that is still trying to go for periods that predate the Wayfair decision on this. I don't know if I want to use the word harebrained. My former colleagues might be like, Jamie, come on now. but this theory, right, that that one got fun when you're just like, yo, friend, work with me here.
And just so our listeners are aware, I mean, we talk a lot about how it all starts with Nexus. Andy, one of the founders, co-founders of Peisner Johnson, wrote a book. It starts with Nexus, and that's when the state can impose upon you as a business to collect their tax. And so when we talk about cookie nexus, we're not talking about chocolate chip cookies and delivering chocolate chip cookies. We're talking about the cookies on your computer from an internet browser that are left on the computer by a company merely going to your website, right?
Yeah. Yeah. We're all getting those privacy notices these days. Every time you go to a website, this website uses cookies. Those are the cookies we're talking about. And, the two kind of aspects that we're dealing with still in Massachusetts. For one, it is under active litigation, right? My firm is representing U.S. Auto Parts Network, which is the name of the company, challenging this very regulation, saying, there is absolutely no way that cookie nexus constitutes the type of physical presence that was required to have. And we sat there in the arguments last week, and the state truly is arguing that, cookies are electrons, and electrons have mass at the atomic level, and mass therefore is tangible and physical and creates nexus. I kid you not, that was the argument.
Wow.
And I was kind of rolling my eyes a little bit, but they went there, and trying to say that cookies create nexus. But I think the more concerning part that the state is raising now is they've almost like washed their hands of the cookie nexus part, even with the atomic mass in the state of Massachusetts. And they're saying that under the rules that exist in the Supreme Court right now, the precedent that exists, that when the court overturns its own precedent, it's as if the old rule never existed. So when it comes to taxes, what Massachusetts is trying to argue, and I think this is very dangerous for other areas as states kind of jump on it, is to say that it's as if quill never existed. The physical presence rule never existed. And so the state can retroactively apply Wayfair to justify this regulation for periods that predated the Wayfair decision. So that is what, the state is really pushing in this argument, that it can now kind of rescue a regulation that couldn't stand on its own feet before and now needs to enforce it. And you'd think that, the ultimate irony is Massachusetts repealed this regulation. It was short-lived. It only was around for 2 years because the state changed the statute, right, to officially adopt economic nexus. But they're still sending notices out to companies. So, for businesses that are now registered in Massachusetts, are now compliant, but didn't register before the states changed the statute, be aware, because the state is still sending out these facetious love letters, as I call them, to say, we think you had enough sales that you should have been subject to this old regulation that is now dead because we repealed it, and we want your money during that period anyway. The Massachusetts is hot.
I mean, we laugh about it because it's laughable, in my opinion. But I mean, businesses are getting impacted. They're severely impacted by this idea that the state can merely come in, and even though it was appealed historically, right, they can go and revisit it. And we ruled on it in this way several years ago, but now we're going to rule in a different way.
Yeah.
What? How can you do that to a business who's just, trying to keep up and make a dollar, and now they have to deal with this retroactive baloney? You know what I mean?
You're speaking to my heart, because that's how I feel on a lot of it. But, it's sad. I think the states don't appreciate how challenging and difficult it is to implement a software solution for companies. And this type of automation that you're talking about, Paul, it's critical. I mean, I've talked to some clients and they say, can I do it manually? Really, can I do it by myself? And it's like, no, I'm sorry, but no, do yourself a favor, do us all a favor, and get some sort of software system in place. And I mean, I remember having those conversations when I was on the state side. They truly think it's a flip the switch and you're done. It takes months to integrate and to do it properly and to make sure that you're set up to collect. And I think states just don't don't appreciate that, don't appreciate the challenge that it was post-Wayfair for people to get into compliance. And now we're starting to see it too. I think, I talked about those kind of 3 areas that I'm seeing a lot. The next biggest one is, the audits are coming. We're starting to see states like Wisconsin and Nebraska and Illinois, Massachusetts, obviously, Texas are some of them, that they're sending these notices out to remote sellers saying, we started enforcing economic nexus in October of 2018. Yep. Here's a nexus questionnaire,
Yep.
fill it out and send it back to us, and we're going to assess you. Yep. And are really just not at all open to hearing the kind of due diligence, the stories of the companies in the efforts that they went to get technologically capable to comply in the first place.
Yeah, it's surprising. Even our own clients, who have automated solutions in place, and those who don't, like trying to implement. Another one that comes to mind that was a real headache was that Colorado one, the retailer's delivery fee. I'm supposed to charge this fee now on top of all of the orders, but it's only per transaction, not per delivery. Like trying to keep up with that. The state just imposes it, and then they set a deadline of next month or 2 months down the road. This has got to be in place. It's just like absolute mess. Yeah. One of the other things that I thought that the state did do a good job on, some of the states anyway, was on the economic nexus. When they imposed the economic nexus legislation, some of the states said you had until the following year to register. So they gave you ample time to figure out a software solution, how to get the taxes turned on, how to collect it, and then how to remit it. Like, how do I even become compliant? I'm just trying to sell some fidget spinners, for crying out loud, in your state. I don't know anything about tax, you know what I mean? So I thought that was nice of some of the states who allowed that delay or gave the taxpayer time to collect.
Yeah, unfortunately, my home state of Maine was not one of them, but that is one of those aggressive states that it went live July 1 of 2018. Yeah. 9 days after the court issued its Wayfair decision. Of course, they didn't announce that until mid-August, but they did say, naturally. By the way, your return is due in 5 days. You should have been collecting 6 weeks ago. Don't forget to file.
Then you go and file the return late. They go file the return late, and now penalties and interest. Oh, yeah, you should have known that was due 5 days ago. I mean, come on.
Clearly.
Yeah,
That's the challenge. With these Nexus questionnaires too, there's such a trap for businesses because how do you know how to respond to that? You think you're going to be in good faith and write down the responses to all the questions and send them all the data that they're asking for. And what happens? You get this, 30-year assessment bill coming back to you saying, what did I do? Yeah. Help me!
Yeah. So, you misunderstand. Oh, hello. You misunderstand the date you're asking for, or whatever the case may be.
Hang on, pups.
So what questions on there are traps? Like, what should you be aware of?
I'll give you an example out of Wisconsin right now, because the state is sending these notices actively out to companies. They're looking for 7 years worth of back data. The state did not begin enforcing economic nexus till 2018, so they're seeking multiple years of data prior to when they began enforcing it. They are asking for your customers' names and the volume of sales to each customer. I'm sorry, the UPS delivery man is in the background. Life of working from home. They're asking for those are some of the big ones. The date you began selling, are you registered? They're probing things like, why are you not registered for income taxes, stuff like that. And you think on there, okay, well, that doesn't necessarily seem that nefarious, right? You get this and say, all right, well, 7 years worth of data. 7 years is kind of your standard tax period. My accountant tells me save 7 years worth of records. Okay, so I have the numbers. But when you think about it, it's, all right, well, the state can only require me for the last 4 years because that's when they were enforcing economic nexus. So there's trap one. Is it a state that only looks at retail sales? Does it include wholesale sales? Does it include exempt sales? Is it only based on taxable sales? So all of those questions go in when I look at it. What can I
marketplace facilitator sales?
Yeah, all of that. And so, if you are a taxpayer, a business just getting one of these notices on your own, those are things you may not think about. And you may end up sending the state far more information than the state's entitled to require you to send.
I think from an overall perspective, whether it's a nexus questionnaire or an audit, I mean, the state just makes these blanket requests, right? We need all of this information.
Your whole general ledger.
Yeah, don't do that. Don't do that. Don't send that. Don't send that. Just send this. And then you send that, and then the states get by. Or they figure it out. Yeah, I'm not going to provide you my depreciation schedule of all my assets. Why would I do that? It has no impact on what we're doing here. So let's just stay in the lane. But oftentimes,
so one state recently was asking for every return you filed in every other state.
Yeah.
Like, no, you're not entitled to that. No, I'm not going to give it to you.
Explain to me how my sales in Nebraska have anything to do with my business in Wisconsin. It doesn't have anything to do, so I'm not going to provide it. Sorry.
Yeah. That's where it's worth, a 5-minute phone call with your tax pro to just say, hey, I got this notice. How do I respond? Because let me tell you, it is far more worth spending the $100 it's going to cost you to talk with me through for this on my charges than it is to fight the $10,000 or $100,000 assessment that you've got on the back end, especially if it's coming out of some of these states like California and New York that have pay-to-play requirements where you have to pay that assessment to challenge it in the first place. And
my goodness.
Yeah.
An absolute nightmare.
Yeah.
Absolute nightmare.
Yeah. So traps, watch out. Send your accountants those love letters. Open your mail. Check them envelope.
One of the things I talk to clients a lot about when they get these letters and things is the fact that you can't just bury your head in the sand and ignore them. No. It's the last thing you want to do is just ignore it. We're working with a client right now who ignored it for a long time, and the state just starts levying or putting a lien on their bank account. Right, they're freezing your assets and they start pursuing them. It's just like it didn't have to get this messy. Just respond or just do this little thing, and it doesn't have to be as complicated or overwhelming as you may think. Just by collaborating or talking with a tax professional can really help make your life much easier.
And it's painful too. Texas moves to that levy stage very quickly, among some other states. And when you start to get levies or liens on your property, that's not just a tax matter. That's not just a financial matter. That could put you in default on some of your other financial obligations, your lines of credit, your other debt financing for your business. So it becomes really problematic really quickly if you kind of take that head in the sand approach.
Yeah. And then they start sending letters to the owners and officers of the company. The last thing you want is for the president of the company to call you because he received something at his personal home address pertaining to something that you failed to respond to, right? It's like,
nobody wants that.
I can't imagine.
Nobody wants that.
I can't imagine. Cannot imagine.
Happy Thanksgiving. Here's your tax bill.
Be grateful.
I do write a lot about gratitude, Ryan, but gratitude for unexpected tax notices is not one of those poems.
100%. 100% not one of those you're grateful for.
No.
I love it.
No.
I love it.
So, Jamie, thank you so much for being on our podcast today. Paul, you as well. It's been really fun to hear you guys chat about the world of sales tax and taxes in general.
Yeah.
And Jamie, maybe we'll see you in the Supreme Court again as we're following.
See, Cookie Nexus case is coming up. So,
dude, that is amazing. I cannot imagine how that would feel. That'd be so cool.
Like over under tax world betting pool, who gets to send the chocolate chip or oatmeal raisin cookies depending on how this case comes out.
That's awesome.
And on that note, it has been a real pleasure. Thanks for having me.
Yeah, absolutely.
Yep.
Thank you.
Well, until next time, we'll see you on another one.
Thanks, Ryan.
Thanks all.